Hi everybody and welcome to Forex.com's top 3 FX ideas for forexspace.com for the week beginning July 15th with myself, Kathleen Brooks, Research Director here at Forex.com. So it's a massive week for the markets. We've got a huge amount of fundamental risk this week, and that is where our main ideas are actually coming from. They're emanating from this big event risk that we have, namely the main one is going to be central banker, the head of the Federal Reserve, Ben Bernanke, is testifying to Congress. Now, central banks are having a huge impact on markets at the moment, especially in the US, as the markets try to decide or figure out when tapering is going to take place and emergency stimulus measures that have been in place for the best part of 6 years really are going to be taken away. So our first idea comes from the euro. We're going to be looking at euro dollar. Euro dollar it managed to really recover well last week after some more dovish than expected minutes from the FOMC in the US. Now we need to see if the Federal Reserve and Ben Bernanke himself will be able to extend those dovish thoughts this week when he testifies to Congress. That takes place Wednesday and Thursday, but it's Wednesday which is going to be the most important day. So if he is sounding quite dovish, that could weigh on the dollar, push Treasury yields down as well, and that could just help boost euro dollar. Now right now, as you can see, this chart has some important daily moving averages on there, the 50, the 100 and the 200-day moving averages, which are acting as a really key sticky zone, and they're actually quite close together. They go from 130.50 all the way to 130.75, and that is a really sticky resistance zone at the moment. Now we did recover from 128, and if we do get a more dovish than expected Bernanke, then we could retest the highs from last week, those 132 highs that we saw on the back of those more dovish than expected minutes. So do watch out for that. That will be key for euro dollar, but we do think 128 is a medium term low, with 132 being really stiff resistance, especially if we do get a dovish Bernanke. Now our next idea is the S&P 500. Stock markets have had a fantastic week this week. We've had, or last week, they are so close now to fresh record highs, but what will be the drivers? Now we've seen the Russell 2000, now that is an important smaller cap index in the US, actually break fresh highs at the end of last week. Now that is a very bullish signal for the Dow, the S&P, the major markets in the US as we start a new week. Added to that, more dovish commentary from Bernanke. Remember, markets love liquidity, and if we get more dovish commentary from Bernanke, then that could be really what takes us to that 1700 level. However, even though we think that there is more upside to come in stocks, or that we could make fresh record highs, we actually think the opportunity is to sell on these highs, and the reason why is because the economy may not be strong enough to sustain gains at where we are, and we do think that tapering will definitely take place at some point this year, well this quarter anyway. So we do have to start thinking about maybe stocks, yes they might make fresh record highs this week, but we don't think they will necessarily extend those gains, and around about that 1690 to 1700 level could be a good shorting opportunity. Now our final idea for the week is the pound. So the pound will be moved by what's going on with Bernanke, but it will also be moved by some key event risk for the UK. We have CPI on Tuesday, and then on Wednesday we've got the first minutes from the Bank of England meeting headed by Mark Carney, the new governor at the Bank of England. There will be three things we're looking out for from those minutes. Number one, did he vote for more QE? Number two, how close are we to more QE? As in, how many other members voted with him if he did vote for more QE? And then the last thing is, is the committee, the MPC there, are they worried about the uptick in inflation? Because inflation is expected to tick up back to that 3% mark. So let's take a look at the pound. As you can see, it's really been kind of oscillating around a little bit. It looks like 148, just below 148 or just below 148.50 there last week was a really key reversal. That was a bullish Harami pattern. So that seems to be a medium-term low for now. But stronger inflation and potentially less of an impulse to do more QE from the Bank of England could really see us recover. Now we've got above 150.50 on this Monday afternoon, but can we extend those gains to 152? That is the high from last week, and that for us is going to be key resistance. Over the medium term, we do think that we'll be trading in a range between 148.50 on the downside, 152 on the upside, but we think there could be a bit of a bullish bias for the pound this week, and we'd look to buy on any dips. Okay everyone, good luck trading this week, and please do join us soon for more. Thank you.